No, very much so. We have actually had just a question in with a bit more UK focus on rates, just to sort of elaborate on the point a little bit. I don't know if you're into sort of rate predictions and things, but they're asking sort of maybe how much higher is anticipated for UK rates from the Bank of England, and you know, where do you think that sort of terminal point might be? You know, given the inflation forecast might be starting to look, you know, like it might be tipping off a little bit.
Yeah, I mean, one of our colleagues was saying in the team meeting this week that we're all, as I've sort of kind of said to you, basically we are positioned for central banks to have to pivot globally, because the recession data gets so bad and inflation starts to fall. Now, when that happens, I said we don't know. The US, it really depends on how quickly the data moves and how the Fed's reaction function. But one of my colleagues said this week that, in his view, the pivot has happened in the UK, and you saw that in the comments of Andrew Bailey that inflation is coming down. We can't tolerate much higher rates. I think it's very interesting that they're still trying to sell their bonds, but that's perhaps a conversation for later. But my view is that the interest rates cannot go much higher in the UK and are likely to start to fall more quickly than elsewhere, because the economic situation is so much bleaker, thanks to a load of structural headwinds that the UK is facing. We have a growth issue, we have a productivity issue, we have the same post-COVID issues that most of the rest of the world does, but we're also dealing with a Brexit transition that makes it all the harder. This is not